Let's bring in PepsiCo's Vice Chairman and CFO Hugh Johnston from the company's headquarters in Purchase, New York. Also a member of the CNBC Global CFO Council. Our Sara Eisen's here at Post 9, though, and we'll kick things off. Hey, Sara.
Hey, guys. Good morning. So, Hugh, it looks like Indra's ending her 12-year tenure on a very high note as far as the underlying business, 4.9% organic growth, a turnaround in North American beverages. What drove some of the changes you guys saw this quarter?
Yeah, absolutely, Sara. Good morning. Great to be with you all here. Overall, I think a strong quarter for us. You cited the revenue number, and EPS number was 9%. We obviously feel terrifically good about that. In addition to that, the portfolio is working very well. International growth was 9%, developing and emerging markets at 10%. Frito-Lay delivered another strong quarter, and North America beverage, as you noted, was a meaningful turnaround, up 2.5% after a couple of down quarters. Some challenges in North America in terms of commodity inflation and transport inflation. But as we put pricing into the marketplace, both in the snack and beverage businesses, we expect the profit performance will improve in those businesses as we move forward.
Yeah, raising prices just like your rival Coca-Cola did. Also on the forecast, seems to be a bit of a surprise. Talk a little bit about the U.S. dollar. We know it's stronger, especially against some of those emerging markets countries where you do business like Turkey and Russia. How acute is what you're seeing there versus what you've experienced in the past, both in consumer behavior and also in the impact on your bottom line?
Yeah, the good news is consumer behavior in those markets is holding up very well. When we have the type of inflation you're seeing in places like Turkey and in places like Russia, obviously we have to increase prices, and we've done so. But again, our products are relatively low cost compared to lots of other options that exist within the marketplace. So the consumer side is holding up well. From the standpoint of the overall financials of the company, the first half of the year, the dollar was actually a tailwind to our results. It flipped to a headwind in Q3, and it'll be a slightly more substantial headwind, we believe, in Q4. So we had to cut the U.S. dollar guidance by a percentage point, but we did stay on our constant currency guidance of 9%.
Jim Cramer, how do you get ahead of this transportation issue? I mean, is there any level that you can pay that just says, you know what, we've got the drivers? I just don't understand how this could be an issue quarter after quarter after quarter. Is this just a human shortage in this country?
Yeah, Jim, in a lot of ways it is. The market for drivers right now is very competitive. It's a market that's not getting a lot of young people entering it. The average driver age is about 49 years old. It's about 94% male. A lot of the drivers in the marketplace right now own their own trucks. And frankly, we're dealing with a combination of two things. One, a healthy economy. So people who can choose to drive or do other things are oftentimes doing other things. And that combined with the fact that DOT regulations now are being, I would argue, enforced better among a lot of the trucking community because of electronic tracking. It's just shrunk the available supply of miles out there. I think as typical in economics, as wages rise and as the marketplace sort of evolves, you'll see the typical supply response happen, but it takes a little bit of time to do it.
Well, two things. One, this administration is very anti-regulation. Is there any chance that the president says, you know what, we've got to give these drivers a chance to make much more money, rolls that back? Second, is the problem basically to get new drivers that we're going to have autonomous vehicles and people feel that after they've learned this thing, say a 25-year-old, their job could be phased out because you're taking trucks from one place to another to another. You program those. You really don't need drivers.
Yeah, I won't speculate on what the White House might do in that regard, but you're absolutely right. I think you have a lot of young people concluding, particularly in a robust job environment as they're entering right now. A lot of them are probably looking at the option of driving as a career and saying, you know, the long run perhaps doesn't look as good for that career if I'm a 20 or 25-year-old. So therefore, maybe I choose construction or maybe I go in another avenue in order to build a career. So I think that choice is affecting itself. That said, again, as we mentioned, the laws of economics typically work. When wages rise, it will attract talent. It just appears we're all going to have to pay a little bit more, and I think it'll sort itself out over the next 6 to 9 months. I don't view this as a 5 or a 10-year issue. I view this as sort of a supply-demand issue that'll take a year and a half to sort of work its way through.
You know, Jim brings up the transport cost inflation. You're also feeling it on aluminum and tariffs. And I'm just wondering if you can talk a little bit about how exactly you are planning to pass that on to consumers. Is it through smaller packages or higher prices? What exactly are we going to see from Pepsi, and how much is it being affected by the tariffs?
Yeah, it has an impact on the beverage business. Clearly, the snacks business uses very little aluminum, so not much of an impact in that regard. As we move forward, and obviously as trade deals are reached, we'll evaluate those and see what it means for our forward guidance in terms of what we expect on commodities and therefore what we expect in the income statement. What I would say is this: I think you're going to see higher pricing, which will deal with it to some degree. And to some degree, you'll also see package rotation, particularly as you see a bit more pricing increases on cans and things like that. You'll see consumers move over to PET bottles as sort of a logical response to the pricing differences that they may see.
I wanted to follow up on something I just heard on the conference call. Indra Nooyi, sounds like Hugh made sort of a dig at your competitor Coca-Cola when talking about the coffee business, says you're not planning to get into restaurants, which of course was reference to Coke's new deal to buy Costa Coffee. What is your strategy around coffee? It feels like all the big players, JAB, Dr. Pepper, Snapple, of course there's Nestle, and now Coca-Cola in a very big way. It's one of the hottest growth segments in beverages, pun intended. So what's your strategy there? Yeah, no question, Sarah. The good news is we've had a coffee strategy in place for 25 years. It's working very well. We put together a joint venture with Starbucks back in, I believe it was 1994. And that venture has been tremendously successful for both of us. In all candor, when it comes to bottled coffee, we were basically the only choice for a long period of time. I think as you see consumers migrate more into these coffee products because they're looking for healthy energy, you're going to see some competition play in that space. We're fine with that. We think we have the best brand with Starbucks. We think we have the best partner. And frankly, we've been tremendously innovative in the coffee category. So we're not surprised to see competition come in. The challenge for us is obviously to continue to innovate and stay ahead even further. Regarding the restaurant question that you bring up, we love the restaurants as customers. We have an enormous number of restaurants as customers. And frankly, that's where we think we sit as somebody to make our customers in restaurants more successful as opposed to competing with them.
Okay, you later this week, Constellation Brands reports Rob Sands. Rob Sands has put $5 billion in a cannabis company, Cannabis. Let's not laugh about this. This is a market that could take the country by storm. We are seeing wine, we are seeing beer down. This is legal in Canada, October 17. Can't Pepsi at least explore this? Because if it does take the world by storm, and ultimately our country by storm, PepsiCo cannot be left behind by this.
Yeah, Jim, look, we look at every growth opportunity. I mean, we turn over every stone to look for growth. And frankly, that's why you've seen our growth performance over the last number of years being in the top quartile relative to our consumer products peers. As far as cannabis specifically, I do know that it will be legal shortly in Canada. In the United States, it is still federally illegal. I know some states have legalized it, but federally it is illegal at this point. So I think we will look at it very critically, but I'm not prepared to share any plans that we might have in the space right now.
Edibles or liquid?
I've already gone farther than I planned to.
Are you asking about his personal preference?
No.
Although we did ask Boehner that question once.
Hugh, final question. What's the leadership transition going to be like for you and everybody at Pepsi? Indra's last day, reflections on that, and what we can expect from your new CEO, Ramon, who's been with the company more than 20 years.
Yeah, you know, the leadership transition has gone remarkably smoothly, as it pretty well always has in PepsiCo. I've been through quite a number of these over the course of my 30 years plus being associated with PepsiCo. I think you'll see two things. Number one, a continuation of the focus on innovating and reinventing the company, a focus on strongly both delivering performance in the short term and also investing for the long term. And I think you'll see a terrific leader in Ramon LaGuardia. So I won't speak for him, but I will speak for the rest of the company in saying we really do look forward to his leadership of the company.
All right, we'd be very remiss if we did not thank Indra Nooyi for her many years of leadership and wish her the best of luck. And I sure hope we will see her in multiple occasions, but I understand her desire to spend time with her family, do the things that she sacrificed to do so well at PepsiCo. Thank you.
Jim, I completely agree with you. She's obviously been a remarkable executive and a remarkable person, and for me, a remarkable friend over the course of the last 2 decades. I think in a lot of ways, not to be reductionist about it, but this quarter exemplifies a lot of what Indra's all about, which is delivering short-term results and at the same time investing for the long term, constantly looking for ways to do things better, more creatively, in order to win in the marketplace and to really create the most successful company we can possibly create. So I can assure you, everyone at PepsiCo thanks her for all the leadership and all that she's given us.
All right, Hugh, thank you. Always good to have you. See you next quarter. Hugh Johnston, the CFO, Vice Chairman of PepsiCo.